Okay, doing a quick little video here on Microsoft, Apple, Amazon, and Google. So the market was pretty rough today, here being February 24th, 2020. Most well, actually, I think all of these stocks closed below 4%. And just want to do a little dive into them to see, are we looking at this being more of a dip buying opportunity, or is this maybe turning into more of a consolidation pattern? That we might see just kind of trend sideways for some period of time before maybe recapturing some of that momentum that we've seen with all four of these stocks and pushing higher. So starting off here on Microsoft, you can see that we are sitting right around a support around $170 a share. So this is currently the 4-hour time frame. I probably should have mentioned that. Ticker symbol MSFT is for Microsoft. And this is just a household name. All four of these are just a household name. So very big companies. But wanted to point out, here on the 4-hour, we did bounce off this 170 support, and we are now pushing higher. We actually closed right around 171, and since the market closed, we pushed up, and we're now nearing that 173 mark. But if we look to the low side, if this continues to break down, I would look to see 168 to be a support if we were to break below 170. Obviously, we'd have to get through that one first, but 168 would be a support. And then, after that, there's kind of a little bit of a range in here down to the low 160s. We could see, a support kind of form here in the mid 160s if we do get to that level. But I like the way that we closed out today. Again, it was a red day throughout all the major indexes, most closing below 3%. Or above 3% losses on the day. But we had a little bit of a nice close after, or I don't want to say close. The close was actually pretty rough. But we had a nice transition now moving into the after hours. You can actually see here we're up about 26 bucks here on the futures. So a nice little push after a big drop today. You can kind of see that on these aftermarket hours. But moving to the high side, I do want to say that 174, the high 174s here on Microsoft is going to act as a support. And then it's kind of like a gap. From these high 174s up to the mid 178. So that could be a level that we quickly move through if we do, in fact, push back higher towards this 174 mark and break through it. So again, we're sitting on that nice little 170 support. Looks as if we're boosting higher. RSI was well oversold. It's starting to move back up. PPO is pretty low. Hasn't really started to level off or show any signs of pushing back up. So that's just something else to keep in mind. Nonetheless, I like where Microsoft is sitting right now, but I think we're going to need to look at the overall market before making any sort of trade on all four of these. So let's go ahead and move into AAPL. So this is Apple. Again, let's stay on the 4-hour time frame. So Apple, I made a video last Friday on Apple and the potential to see a breakdown of this channel, and today we definitely saw that, and we held right around the high 290s and $300 price point. So dating back here to early January or the beginning of this year, we saw a little bit of a consolidation before breaking through the $300 price point, and that is where I'm getting these levels from. So it was nice to see we broke down through 300, but then we held right in the high 290s and 300 for the majority of the day. We actually did trade up to 303 at one point, and then we kind of sold off into close. And here on Apple, you can also see we have pushed up since the close. We closed down here around the low 298 mark, and now we're up above 300. So this is, again, something that we want to pay attention to as far as how the market trades into tomorrow morning and throughout tomorrow. If the market continues to push higher, does it push, or is it moving up into a bunch of sellers, or are people going to be taking this as more of a dip buying opportunity to push these, get a quick buck and push these prices back up? If Apple does move back up, I would be looking right around 305. I think this is going to be a little bit shaky as we start to move back up. So right around 305 up here to 307, 308 is going to be the resistance level that I'm looking at. And that was like the lower end of this channel that we've been trading in for about a month. Moving higher, higher resistance, I'd be looking right around 315 to 316 as we saw a couple bottoms in here until we actually fell through the floor here today and late last Friday. So that's just my view on Apple. Like where we're sitting right now, if we break down further, I would be looking down here towards the lower 290s, but I kind of like how we're sitting right now and how we held that price throughout today. So let's go ahead and look at Amazon. So this is AMZN. And the good thing that I like seeing about Amazon, I'm going to take it out to the weekly before we dive into the 4-hour. Here on the weekly with Amazon, we can see we're sitting right around that $2,000 price point, which acted as a top here in 2018, 2019, and we busted through it early 2020, and now we're dipping back down, and we closed above it. I think that was pretty important. It was a volatile day, but we are still able to close above that $2,000 price point, which again, I thought that was pretty important, that we didn't close below it. We did close below the 9-day moving average here on the weekly, and we are starting to see the PPO kind of level off on the top end, and the RSI is starting to dip back down, so that's kind of where I was hinting at as far as consolidation periods. I don't necessarily think that any of these stocks are going to rebound and jump back up, say this week or next week, and start making new highs. I think that the overall uncertainty on where the global economy is going is having an effect, obviously, and I don't think that we're going to see people just haphazardly throw their money into these stocks now that they're down 5 to 10% and hope to see a return within 2 weeks on that. I just don't think that that's really realistic. Nonetheless, let's go ahead and dive into the 4-hour chart here on Amazon. So we can see here's our $2,000 price point. Let me keep scrolling this over. You can kind of see that's where I'm getting it from. If we were to break down lower, I would be mindful of the mid-1900s, say 1960 to 1965, as being a support, as that was kind of the lower end of this consolidation period after we tapped through 2000 in mid of last year, around July of last year, and then we broke down from there, but it still acted as a support for a period of time, so that could be a potential if this does continue to go down further. Another level that I would be looking at would be between 1910 up to 1930 as more of a support zone. You can see it acted as a top right around 1910 and all the way up here to roughly that 1930 mark, and that's dating back to the middle part of last year. But again, we're sitting on a pretty important support. We're also sitting on that 200-day moving average here on the 4-hour chart, so I think that's pretty important. And if we start to move higher, some levels I'd be looking at would be around the 2050 mark and then the 2080 to 2090 mark if we push back higher. But again, just be mindful that we probably are not going to see a 4% swing to recapture all of the losses from today on any of these stocks as we move into tomorrow or even Wednesday's trading session. Lastly, let's go ahead and look at Google. So this is GOOGL. And Google is, a little bit harder to look at. So starting on the weekly chart here, what I was looking at was the fact that we have broken down from the 9-day moving average here on the weekly, and by a pretty significant amount. We've also seen the PPO. If we zoom this back out a little bit, the PPO has been way up here for some period of time. So this was kind of indicate to me that Google is going to retrace back a little bit and hold at that level for some period of time until the PPO kind of levels back down, gets down to a normal level. Maybe the RSI dips a little bit lower before getting in. So that's why I wouldn't necessarily be interested in Google, but still potential to see a rebound or some gains as we move into the future. You can see we kind of sort of saw a nice little move here on Google towards the end of the day, unlike some of the other stocks, and we closed. It was below this 1430 mark, which was kind of to me like doesn't really look that good. I would have liked to have seen it close above this support level that it dipped through, but it didn't. So to me, that's kind of like a not so good sign, not so bad sign, but not so good. Nonetheless, we did bounce off of this extreme low that we had back in early February, so that was a good sign. But as far as the outlook moving forward, I would consider there to be some resistance in here. I don't know if you can really pinpoint it. You can kind of see there's some tops, but it was kind of just like staggered to the upside, and then we staggered back down. So maybe you could just throw a line in the middle. That consolidation period or kind of zigzag period for some period of time might, work as some sort of resistance as we move forward. I don't know if that really made sense, but that could be a resistance as we move forward. What I would really be looking at are these moving averages here on Google. Now that we've broken through the 200, 100-day, and 50-day, as we move back up, say up here around 1460, which, hey, look at that, it's right there in the middle of this channel. That could act as a resistance if we start to move back up, and that's roughly about a 2% gain to the upside. So that's about half of the losses that we saw from today. And then the upper end of this resistance would be up here, I'd say around the high 1480s up to 1490, and then even as we push towards 1500 could also be more of a resistance kind of buffer as we get back up to that price point. But if we do start to gather some momentum, and a lot of people see this as more of a dip buying opportunity to make a quick buck, that we could quickly see this move back up to those levels. But I do want to caution you that this could be buying into another leg of the move down. If more negative news about the global economy continues to surface and the coronavirus continues to spread across the globe, that this could just be a quick little push up that is moving into the next leg downward. So just keep that in mind when you trade. That these levels are important. We might not hit every single one. The more volatile the market is, the more we're going to see this quickly move through some of these levels, and nothing. It might seem as if nothing is working out, but just be patient. Understand, even if you don't trade, I think it's really beneficial to watch in these more volatile markets to kind of get a feel of what other people are doing. I mean, this is really just a story of human emotions. That's really what it is. Obviously, there's valuation in it, but as far as like how these candles look and how this chart moves and flows, it's just a bunch of human emotions. So it's cool to kind of view it as that when you're watching the chart throughout the day. You can kind of just get a feel for how how is this going to move. How is the price going to move looking forward? So nonetheless, I hope that you guys got something out of this video. Maybe saw a level that you hadn't seen before, or maybe have just a new perspective. But I appreciate you guys watching. Leave a like, leave a comment if you so please. So thank you guys again. I'll see you in the next one.